All right, it's a new week with some great opportunities, and it's definitely that time once again to make updates to see what kind of trading opportunities lies ahead of us and how we can be capitalizing on these potential opportunities. And on that note, I say welcome, traders. As usual, this webinar will be kept as educational as possible, but before we go into the analysis proper, first of all, there is disclaimer explaining that trading foreign exchange and the global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor, and this webinar is for educational purposes only. Now, first of all, we'll be analyzing gold. Why gold? Because the pair is very near to giving to us a very fantastic trading opportunity. So before we go, first thing we need to see here is that on the monthly time frame, we can see that the market has just made this nice impulse to the downside. Now, generally speaking, after an impulse, what you expect is a correction before the possible continuation to the downside. Now we can see from here that in this impulse to the downside, the market has just broken the previous support area, and as you know, previous support when broken becomes resistance. So we do expect that at some point in time the market should come back here for a retest of this broken support, which should now become a resistance, creating what we call a confluence of resistance before possible continuation to the downside. Now from a weekly perspective, what do we see now? From a weekly perspective, we can see clearly that the market has already made some correction. Now, generally, if we want to measure the correction, what we can do is to take our Fibonacci and measure from the high of the impulse to the low of this impulse, and we can see from here that the market has already made the market has already made this retracement to the retracement to the 382 Fibonacci retracement level, which is the first level of retracement we do expect before a possible continuation to the downside. Now keep in mind that we still have the 51 fib and the 61.8 fib level, which is aligning better with the previous, with the area of broken support, which we analyzed from the monthly time frame. So there is a possibility of this market creating a higher high here, possibly before the continuation to the downside. Now going down into the daily time frame, what do we see now? From a daily perspective, we do have possible there's from a daily perspective. First of all, we can see here that the market has been creating a very strong support level, because from all this move to the upside, from here to the upside here, we do see that there is only one candle which is not related to the move, which is this red candle. Therefore, this red candle has created this strong demand area, and you can see from here clearly that all these candles here are acting as a very this area here has been acting as a very strong support level. So until the markets will break to the downside, we would not be looking for any kind of longing opportunities. Now from here, like I said earlier, there possibly could be two scenarios that can play out. Now, if the market would make this this impulse to the upside for the retest of this previous support area, now turned resistance here, then then we would have created a W. We would have created this W formation, and by definition, after the creation of a W, an extended W like this, what you do expect is for the market to complete the pattern, to go and retest the neckline of the W formation. So if and only if we would have the market make this impulse to the upside, we will definitely not be taking these longing opportunities, but we'll be waiting for the market to shift from a bullish market, as we would have when it's made this impulse to the upside, to a bearish market. And if the market will shift from a bullish to a bearish market, then we'll be going in for a nice long for the retest of this neckline here on the XAUUSD charts. Now, if the markets would, on the other hand, break this support here that we are having right now, then what we would have then if we would break this support here, then this support here would now become resistance here. So on the retest of this resistance here, we would be looking for the market to shift again from the bullish market to a bearish market. And if the market will shift, then we'll be going in for a nice shorting opportunity again for the retest of this previous low here. So guys, this is the situation of gold, and this is how we intend to trade this markets in this coming week. We're definitely looking for shorting opportunities in these markets, and if you do have any comments or any markets you would like me to analyze, feel free to send it on the commenting section. And cheers for now. Have a nice day ahead.